So after a very good response for the first session, it has been a big responsibility for us to start with the second session and with a very good topic. So that's the reason we have chosen a topic which is relevant to the current market scenario, and also the which can give the future outlook on the economy as well as on the markets. So today we are going to discuss on the world manufacturing the fewer goods. Right, you must have been seeing since very few days that there is a sharp fall in the manufacturing activity uh, across the globe. Even in India, there was a slowdown, and even in rest of the world, there is a slowdown. So first, we'll understand why, how much was the fall in the PMIs, and what might be the reason behind it for that fall. Okay. So here you can see the US manufacturing PMI, which has PMI is Purchasing Managers Index. That means every ISM Indian Institute of Supply Management will take out the data from the different market participant, different industrialists, and calculate Purchasing Managers Index. That means this gives us the level of purchasing, which is level of new orders which are made for the procurement of any industrial material which they use in their production process. So that signifies that how much are the companies willing to invest in the raw material, and how much they are accumulating the raw material, and they can start on their production, and they can increase their production. So this index signifies that whether there is a contraction in the manufacturing activity, or whether there is a decrease in the manufacturing. So a number which is 50 above, here you can see the red line which is marked for the level 50. So if the number is above 50, then it will be an expansion, a manufacturing activity expansion. And if the index number comes below 50, then it is considered as uh, just a second, I'll mute everyone. Yeah, done. Okay. So here you can see when the trade war has actually started during February 2018, the PMI has peaked out. That means from the February 2018, the PMI has never went higher than the earlier record. That means from the start of the date of trade war, there was a decrease in the purchasing manager index. That means people were expecting that to slow down their production activity from the start of the trade war. Trade war has actually started in February 2018. So from there, we can actually see that there is a steep fall in the PMI index, in the US PMI index. And one can also understand that there is this fall during from February 2018 to current reading of September. This fall is very steepest than any other fall which you can see overall in the chart from starting from 2001. Except if you leave the recession period of 2008 and 9, there is this fall is the steepest among everything. That means this fall is like it has fallen by 21% in just 19 months. So this signifies that there is this definite weakness in the manufacturing activity which comes from the US. Then yeah, next we'll move on to the China. Yeah, China manufacturing activity also slowed down along with the US, where you can see in June 2019, it has recorded only 49.5. That is the lowest in the recent days, right? And from the date of 2018, when the trade war has started in February, it has recorded a very steep fall just at 48. So that signifies that there is also a manufacturing contraction happening in the China during the same trade war circumstances. So, but even though you can see the blue bars over here which are increasing, these are the PMI numbers which are increasing recently, but this red line indicates that there is the growth has slowed down. The increase in that PMI activity has significantly slowed down, and which is just moving below 5%. It was never a situation that China was industrial production was below 5% before trade war. So this trade war signifies that there is definite fall in the industrial production as well. Although we have seen a sharp uptick in the PMI numbers, but the growth of that uptick is very slow. That signifies that this uptick will not stay for longer. That indicates that it will come down very soon. So this is from China. And when we go to the world, other countries where the manufacturing PMIs, if we consider, if you see Euro PMI, UK PMI, India, and Japan. So these 6 countries I have chosen because these 6 countries contribute to 66% of the world overall production activity. China contributes to almost 20% of the world manufacturing activity, and whereas US contributes to 18%. Eurozone entire, including France, Germany, Italy, and everyone, they contribute to around 14 to 15% of the total production, and India contributes to around 3%, while Japan is 10%, and UK is around 1 to 1.5%. So overall, only these 6 regions contribute to almost 66% of the total world manufacturing activity. So that's the reason I've chosen only these 6 countries for our understanding. So, but interestingly, when you see US and China PMIs, they started to drop only when there is trade war issue has started. Only when the trade war issue has started during February 2018, these US and China PMI has actually started coming down. But when you consider Euro, UK, and Japan PMIs, they've actually started to come down, or they have just peaked out before the trade war has actually started. That you can see in December 2017, and you can see these are the highest recordings which they have done only during December 2017, but the trade war has actually started in February 2018. So that means the weakness in the other parts of the world, whereas you consider Euro, UK, Japan, the weakness has already started before the trade war has started. Only in US and China, which were growing at a robust rate before the trade war, the weakness has started just after the trade war issue has initiated. So this signifies that there was a slowdown. You cannot make entire responsibility, or you cannot make trade war as just only single culprit, but there was also some other reasons for the fall in the manufacturing activity. That we will understand in the later part of the session. Yeah, next, reasons for slowdown. Just telling you that we'll understand the reasons for the slowdown. The very first reason and the main reason will become, as I was talking since the beginning of the session, that the trade war is the only major concern for this slowdown in the activity. So trade war remains as the single biggest culprit for the recent economic slowdown. And China and as I was just telling, that China and US contribute to almost 35 to 38% of the global production. So when two countries which contribute to almost more than one third, one fourth of the position, one fourth of the total overall production activity of the world, when these two countries involve in such an environment where they're struggling with the trade deals, so this signifies that definitely there will be a slowdown in the overall world manufacturing activity, which we have witnessed now. And there is also another reason, that uncertain future outlook. Yeah, okay, the trade war has started and we may be getting a deal. So once we get a deal, managers will start to procure the goods and they'll start to produce more. But there is a future, the future outlook is really uncertain. That's the reason they have stopped the new orders, they have stopped the capital expenditure, and they have stopped to recruit more people into the manufacturing industry as well. And the wage growth has also slowed down, which I'll show it in the next chart. Yeah, you can see this chart that this red line shows that the manufacturing employment index, matlab, how many people are being employed into the manufacturing industry in US. And then this blue bars indicates that the new orders to the manufacturing companies. The new orders to the manufacturing companies getting are coming down, and you can also see that the companies are hiring less number of manufacturing employees because they don't have any activity to do in the near future, and there is also a large uncertainty going into the future that they may be stopping the production for some time, or they may be slowing down the production for some time. So because of this uncertainty, they are even not hiring so many people into the manufacturing activity. And this green line indicates that the new orders did not fall immediately, or even the employment did not fall immediately after the trade war has started. That has flattened, that has stayed at the same level when the trade war has started, because there was no such a big ambiguity, such a big uncertainty when the trade war has started, that this will extend to these many years. We have done with almost, I think, close to 2 years when by the completion of 2019. So people did not expect that this will continue for 2 years. So the manufacturing new orders or the employment did not, or the new hiring of new employments into the manufacturing industry did not stop. But recently, starting from the 2019, we see that the people have started not hiring into the manufacturing index, because manufacturing activity, because there was no new orders also which were coming to them. So this signifies that from 2019, the situation has intensified, and the trade war has taken over the whole manufacturing industry into its hands. Yeah. Next reason is the cyclical impact. Like I was just showing in this chart, that the world manufacturing PMI was peaking out just before the trade war has started. So this is some kind of a cyclical impact. Even when you see just a second, let me give you this chart. So this chart shows that after the recession in 2008-9, this steep fall, and then we got a fall in 2012, which is just 4 years after this recession, and then we got in 2016-17 again we got a fall. So this signifies that there is a cyclical impact. And then after 2016, we might see in 2020 there was a cyclical impact which might be coming in 2020, but because of trade war, it has come a little earlier. You cannot say little earlier, but it's way much earlier than the usual pattern. Usual pattern shows that every sector, whether it may be manufacturing, whether it may be service industry, automobile, telecom, every sector undergoes a cyclical correction for every 4 to 5 years, and of course a recession for every 15 to 20 years. Right. So since we have seen the recession in 2008, so there is still more time for that cyclical impact to come in a normal way, but not when you keep aside this trade war. In a normal way, it takes 15 to 20 years. And also this cyclical impact of 4 to 5 years is going to come in 2020. But because of the trade war concerns, so this cyclical impact has come little earlier. So when do you say that this is just a cyclical impact or not a trade war concern? You can say that if like earlier, if the US, as seen in this chart, if like earlier, if it moves above just touching 50 and moving back again above, just touching 50 in 2016-17 and also moving higher again. 2012 also it touched and moved higher, but this time the fall was very steep, like we have discussed in the early, and this fall is also sustaining below 50 for a longer duration. So this, you cannot consider it as, you can directly not rule out that this is just a cyclical impact. Yeah, so these are the three reasons for the slowdown in the activity. Three main reasons. There are many others, but the time won't be sufficient if we start to dig out everything. So three main reasons include the trade war, the main reason, and the uncertain future outlook, maybe on the trade war and also on the cyclical impact. and the next comes the cyclical impact, which we see for every 4 to 5 years, and also the recession for 15 to 20 years, which are delayed, but because of the trade war, they have come little earlier than the anticipated. Yeah, I was just telling that what happens if we continue, if the US PMI continues to stay under 50 and it continues to fall, not like rebounding in 2012 and 2016, what we have seen. What if it happens to continue to fall down, and what if it happens to this trade war issue continues to go on for the next 2 3 years as well? So this will have a spillover effect. In an economic language, we call this as a spillover effect. Spillover effect means the slowdown in the manufacturing activity, or you take any other case like slowdown. It may be from the banking industry, it may be from the service industry, or it may be any sector. If it continues for a longer duration, so then that slowdown will impact the other sectors of the economy as well. So here in this chart, you can see that in 2018-19, when this is US non-manufacturing PMI data, that means this includes services and other than manufacturing. So in 2018, you can see that there was a fluctuation, but the overall trend was on the upside. Even in July 2018, you have got a big steep upside. But since then, at the end of 2018, from the last quarter of the 2018 and 2019, this also started to take the impact of the slowdown in the manufacturing activity. Matlab, slowdown in the manufacturing activity started to impact on the non-manufacturing activity as well. So from 2018 last quarter, that has started to take over the non-manufacturing activity, which you can see on the chart, that from last quarter of the 2018-19, it has taken a steep fall. So this means that this problem in one sector, this slowdown in one sector will start to impact on the other sectors also, if that tends to stay for a longer duration. That is slowdown in both manufacturing and non-manufacturing will certainly impact the banking sector and the credit growth as well. So this, if manufacturing sector is not doing good, and it has taken a spillover effect into the non-manufacturing sector, and that also started to fall, so that definitely will impact the banking sector, which people may not be able to, both the companies which are involved in manufacturing and non-manufacturing sectors may not be able to pay more, may not be able to repay their loans taken, or they might stop their production activity, or they might stop their capital expenditure. So this will eventually end up to taking into a recession kind of a thing. Yeah. So yeah, we have understood that there is slowdown in the manufacturing activity, and we have also understood what is in which countries how much is the fall, like we just see in this chart. And surprisingly, you can see only India is now currently holding the position above this 50 mark. 50 mark indicates, this yellow line 50 indicates that there is an expansion in the economy. But when you consider all the four countries, and even if you take US and China, out of all the six regions, only India is moving above the 50 trend line, 50 mark. So that signifies that you cannot take the Indian scenario into consideration when you're doing all this analysis on other countries, because India still holds above 50. But there was a slowdown. You can see in the chart, there is a slowdown and it is not increasing. I'm not saying that it's falling below 50, but it is not increasing for the time being. It is just staying, sticking to that level at 51, 52 levels. Yeah, we'll continue with what's next. So, as indicated by the new orders and the employment growth in the manufacturing activity, there was a definite slowdown in the new orders. Companies are not receiving the new orders and they are not also employing the new people into the manufacturing activity, this signifies that this effect of the trade war on the manufacturing activity will be there for some more period now. Because when you get the new orders, you employ new people, and when you employ new people and you're getting new orders, you start to produce more. So we have already seen that we are not getting any new orders, and we are also seeing that people are industries are not employing new people into the manufacturing activity. So this signifies that there will be a persistence of this effect for some more days. And a trade deal between the world top two manufacturing nations, that is US and China, will certainly increase the business activity. So that means we need the business. We need definitely need a trade deal which is way better than the deal which was there before the trade war issue has started to reverse this scenario. And a prolonged delay in this not getting a trade deal will definitely kick off the spillover effect into the more dangerous ways. Like we are just seeing it's impacting only the non-manufacturing industry, but this if this continues to stay for a longer, this will also affect banking and the credit growth as well. So then that might result in a global recession. So I'll just recap whatever we have learned from the beginning so that you will just have an overview, and the people who have also joined lately will also get an idea of what we have discussed earlier. So as you can see in this chart, US manufacturing PMI continued to fall, and this fall has actually started just in 2018 February, and you can see in the chart that the fall is continuing, and there is no stop to this fall anywhere. So, and in recent months, it has also dropped below the 50 contraction zone. So below 50 mark indicates that there is a contraction in the economic activity. So this is for the first time it has recorded a lowest level at 47.5, which is lowest in any years since the global recession happened in 2008 and 9. So when you see the China CAIXIN manufacturing PMI also started to fall down, but it has just taken a bounce back above 50. But I feel that this bounce back will stay for only a limited time, because the industrial production growth number is actually sorry, industrial production growth number is actually coming down very quickly. We are just seeing only a 4.8% of the industrial production growth, which is the lowest in 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 the recent 9 to 10 years. And when you consider outside the US and China, if you see Euro, UK, India, and Japan, all the countries are witnessing that there is a slowdown in the manufacturing activity. But this manufacturing slowdown has happened just before the trade war has started, and you cannot relate trade war to all other countries except US and China. And when you see the Indian case, India is still holding above the yellow line, which is the 50 mark, 50 expansion or deciding factor for expansion and contraction mark. India is still moving above the 50 mark, and we don't see any much of the problem caused in India. And then if we see the reasons for that slowdown, you can see that the first reason is the trade war, and the second reason is the uncertain future outlook on the trade war, and also the cyclical impact which we see for every 4 to 5 years in any industry. And then when you go to new orders and employment, we are just trying to understand how far this can go. So when you see that, you can understand from the new orders and the manufacturing employment index. So both indicates that this effect of trade war is going to continue for some more time, because there is a slowdown in the new orders. New orders, companies are not receiving new orders, and there is also a slowdown in the recruitment in the manufacturing employers. And what happens if this continues for a longer? This will create a spillover effect. This slowdown in the manufacturing activity will take over to the non-manufacturing activity also. That means non-manufacturing activity will also fall. Like you can see, always also see in the chart that from the last quarter of 2018, services and the other non-manufacturing PMIs are coming down. So that means the trade war has started to take effect into the other industries as well, apart from the manufacturing activity. And what next is, as indicated by the new orders and the slowdown in the manufacturing employment, we see that there is a possibility of this slowdown to continue for the next coming months as well. And only a trade deal, a proper trade deal, which is a deal better than the previous trade war scenario, will give a definite bounce to the manufacturing activity. And this prolonged trade war concerns will take over the spillover effect, will kick off the spillover effect, and which might cause a global recession. So this is all we have learned during the session, and now I thank you for the joining to this session, and I hope that I've given whatever inputs which I can. Yeah. Next, the session is now open for the question and answers. Yeah, you can use the chat box if you have any questions. I've kept the presentation as simple and as low as less time as possible, because we wanted to more involve in the Q&A session so that I can clarify all your questions regarding the trade war concerns and also regarding the economic activity across the world. Yeah, first question we are taking from Viresh sir. Viresh sir asking that how are you seeing the dollar given slowdown of PMI? Firstly, if you take any scenario when the world economy is slowing down, we definitely see a bounce in the dollar. That we have seen in 2008 and 9 when the recession has actually happened, which was caused from the US itself, but even then the dollar index moved higher. That means whenever there is any recession fears happening in the economy, dollar index will definitely move higher, because dollar index, sometimes people see dollar as a safe haven asset, and they move their assets to the dollar when there is any economic slowdown. So this time also we see that dollar index will continue to move higher, and definitely if this trade war concerns goes for a prolonged period, we see dollar moving above 100 as well, which we have also mentioned in the annual report. Next question. Your next question we are taking from Mr. Srinivas Rao. The question is reasons of trade war. I take this question as you're asking that why the trade war has actually started. See, this is Trump actually feels that the gap between their exports and imports is too huge, and he also believes that people are not manufacturing so many goods in US, and which is not creating employment to the US economy. So they believe that US economy is not getting more employment, because everybody is trying to invest in China, trying to invest in India, trying to invest in other countries where the labor is cheap, and they wanted to manufacture the material at cheaper rates. That means US people are buying goods which are produced outside US. So he wants the production to happen in US and consumption also to happen in US, so that US people will get more of the jobs from the China. So this was the initial motto for to start the trade war, but after the retaliatory effects, it has actually deviated from the main theme, and which is now considering it as a tit for tat kind of replies to between US and China. Next question we are taking from Mr. Chitrasen. The question is, what time we expect end of slowdown? I can not give you a specific date, like we were just discussing during the slides. I can tell you that whenever there is a whenever there is a good deal between US and China, then definitely the manufacturing activity will start a bounce back. Last night we have got very good comments from both the US and China that they wanted to they are getting closer to a deal. So if suppose we get a deal, definitely there will be a bounce back in the manufacturing activity, or in case any other industry. Next question we are taking from Mr. Bijay Patel. The question is, how do you see rupee performing during this time? So rupee is definitely directly related to the trade war, because rupee is relating to the rupee is directly correlating itself to yuan movement. So when yuan is appreciating, rupee also tends to appreciate, and yuan is depreciating, rupee is also depreciating. So it is actually taking a perfect correlation with the yuan. So when you see yuan movement during the trade war, so if there is a good deal, then definitely yuan will appreciate. And there is also a clause in the deal they wanted to put in, that currency manipulation should not be done. So if that is the case, yuan will definitely appreciate very strong. If we get a proper deal and a very good deal between US and China, and if we end this trade war, definitely rupee will appreciate. But this prolonged time to get a deal will definitely uh, make the chances for a weaker rupee. Next, we are taking another question. The question is, does unemployment rate in US create any fiscal deficit to other countries? You see, unemployment rate, when you consider during this trade war, the PMI is reducing, non-manufacturing PMI is also reducing. That is signifying that there is a weakness in the manufacturing activity and the other activity, service activity as well. But the unemployment rate is regularly falling. That means it shows that companies are employing more people outside the manufacturing activity. So this signifies that there is no such emergency, no such worry in the next coming quarter, but this will have an impact when the spillover effect take over to the other industries as well. And regarding the fiscal deficit, I don't think that if the people employ in, there is a direct correlation between unemployment rate and the fiscal deficit. Next question we are taking from Nishant Mishra. What will be the stage of the rupee in coming future? Like I was answering the previous question, if there is a good trade deal, Chinese yuan will appreciate. Same as the case will be with USD and same will be the case with the rupee. And if there is no trade deal and this continues for a longer duration, definitely rupee and yuan will continue to depreciate. And next question we are taking from Mr. Rahul Kapoor. And the question is, why the equities indices not reflecting the so-called slowdown in manufacturing activity? This is actually a very good question. See, like I was answering the previous question, the unemployment rate is not still falling. Matlab, manufacturing PMI is coming down, but consumer confidence, if you take the data from outside this manufacturing activity, there is a still definite growth being seen in those data. Like you see consumer confidence, which is still at a very good rate. Like you see in the unemployment rate, which is regularly moving to the historical lows. That is good news for the economy. So both outside the manufacturing PMI, things are looking pretty normal. I cannot say they are very good, but they are looking normal. So that's the reason it is not reflecting in the what you can say in the equity indices. And equity indices are also moving in with risk on mood regularly. When there is a possibility of a good deal, they are taking the risk on, and the equity indices are moving higher. And when there are any comments from Trump or any comments from China, uh, US equities and the world equity, even in the Asian equities, are moving sharply lower. And next question we are taking from Mr. Nishant Mishra. Are we expecting rupee move above 75 within a month or two? Definitely no. Within a month or two, we are not expecting it to move above 75, but we sure expect that it will move above 72 and move towards 73 by the end of this year, by the end of 2019. If there is no any outcome in the trade war, I will there won't be any outcome also, because Trump will likely to extend this issue till the end of his election, till the start of the next year, 2020 US general elections. Next question we are from, it's a request from Sunil Singh. Please share PPT with us if possible. Yeah, sure, sir. We will definitely share the PPT with all the registered email IDs which has filled up the form and registered with us. Yeah, any other questions? You can use the chat box to ask your questions. Yeah, I can see no questions coming in. So thank you so much for joining, and you can always contact me if you have any further questions. You can always contact me on this email ID and my desk number. You can anytime call me back and ask any of the questions. And we are getting one more question from Nishant Mishra. Will currency be better platform for trade than equity in the coming months? I cannot actually compare between equity and currency, but I can surely say that there is a very good potential in the currency market in the coming months, because we are seeing that there are also chances of increase in the time for currency trading, and we all know that the currency trading requires very less margin when compared to the equity and commodity, and it's a worldwide market. Then there are many other big benefits from the currency market when you compare with the equity and commodity. I surely recommend that if you're not doing any currency trading, I surely recommend you to be involved with the currency trading as well. Yeah, thank you all for joining. We'll see you next in the dollar discourse session 3. Thank you for joining once again.